clip from Tuesday's trading in the S&P, and basically I'm going to start looking at with the I look at the dailies, and kind of the setup we had going into it was quite a bullish setup off the back, and basically the price action I'm going to be showing you is kind of how I started to execute in the sort of the open of the cash. I don't usually condone trading relatively quickly in the SPU, but just a few things I've noticed since coming back trading this market, which kind of allowed you to kind of make decisions slightly differently, I think. And one of the things with the SPU I've kind of noticed straight away is that it's a lot thicker from when I was last trading, at kind of the end of December, and it's also obviously bounced significantly in from its lows. And also just from looking at profiles and stuff like that, it's kind of had a really strong push up and clean auction. It's not really giving you any incentive to kind of look for shorts. And when we had this candlestick set up here of this kind of daily free bar, kind of it was failed inside daybreak, daily free bar, which is kind of what you like to see at the extremes. So extremes of ranges when you have this big mother candle, a single candle inside of it, and then the next candle was still within this mother candle's range, is it kind of condones a kind of continuation of a trend. And you tend to find these kind of range extremes, not reversal patterns that I've kind of seen, but more continuation patterns. And in terms of how we kind of set up coming into the session, I thought it was quite. If I bring up my profiles here, I think it was quite important. There was a kind of a few insights you could kind of take going into the cash open, which you could have used to execute earlier, especially with which kind of come back to the thickness, which I'll look at when we watch the ladder, just the kind of liquidity on the book and the way it trades, and how you have to be a lot more rigid and prepped in your planning, and then you can kind of take advantage of that, and then not be so having to chase moves, and you can kind of like I say, interpret things a bit quicker. So you had kind of a few things leaning in your favour to be wanting to buy it anyway. You had these poor highs, this poor high here, the previous day's high was poor, and then the market coming into the session was gapping up. So we gapped on the close, and the way in which I like to try and, which I would normally trade these free bars, is kind of the break of this high here. But given the fact that we gapped, we had these kind of poor highs in play. The auction, like I said, had been really clean off these lows. So for me, there was kind of no sign of short-term weakness in the market, and we were sort of trading on the underside of this massive bracket here. So there was kind of a lot of incentives in the initial kind of period to be looking to be buying. The market was very susceptible to at least retesting this area, and the market was kind of showing you cues that there was nothing but a consistently strong buyer in the market. So when we opened in value and we had the gap, basically my first cue was to see if the market was going to counter auction and try and fill this gap. And any failure to counter auction, I was wanting to buy relatively quickly, just given like I said, the things skewing you in the direction of wanting to buy. And as a result, we got this really strong break. Obviously, your kind of first target, your main target really, was a break of the 99.5s. I wasn't necessarily sure as to how far we were going to trend, and I also felt we were very susceptible to a deep pullback after a break of the 99.5s. But what I was very convicted on was, okay, right, these poor highs at 96 3/4 were going to go, and yeah, the 99.5 should be traded. And then it was about trying to evaluate, okay, is this going to be a false break? Is this then going to are we gonna continue to trend strongly, or are we gonna balance above this area? So as a result, by the end of the day, we got a very nice balanced P-shaped profile. But in terms of my areas of execution, I was trying to watch the price action off the back for like a buyer into this kind of initial counter auction, if we were going to get some kind of soaking up on the bid. And then I was looking to start attacking above value here of this P-shaped profile on top of the daily free bar. So that was kind of my thinking coming into the day. And yeah, like I said, I'll kind of just briefly chat about what I've noticed in the book at the moment whilst trading this market. So if I bring up my ladders, hang on a second. Okay, I have to play on this other screen here. Okay. Alright, okay, so like I was saying, going into the cash open, I was kind of skewed to looking to try initially try and pick up the market passively. And in terms of the thickness straight away, you can kind of see the book is consistently stacked both sides of the market, 200s, 300s. Going into December, I remember very clearly it was a lot thinner than this. And basically, I kind of find now it's even more important to kind of look where the volume. I mean, I believe we discussed this in my last video, kind of as to where volume trades relative to like where the market is trading. So when I'm kind of looking for this is going faster. So basically, like I said, I was kind of looking for an initial counter auction, and any kind of first signs of sort of failure to offer, failure to fill the gap, I was looking to pick up. Okay, so basically what I'm going to do is just run you through how I mainly managed the trade once I was in it, and then my thinking behind it once I was, like I say, in the trade. Where was that value area high? 87 and a half. So the 87 and a half was the top of the daily free bar, the top of the value area. So for me, I'm just kind of looking to see how the market is trading in this small range. We've had a small counter auction down to around 85s, I believe. And like I said, when the market's kind of this, it tends to churn out prices more, as opposed to, like, I want to be the areas in which I want to lift and kind of attack aggressively, whether it's on the upside or downside. I kind of want to expect a relatively quick reaction, or I want to see a clear shift in the book thinning. Whereas now what we kind of need to get is a lot of churn in small, maybe 1 or 2 handle ranges, and what this allows you to do, you can definitely trade more size, but you need to kind of then be very clear as to where you're managing your stops. So in this kind of smaller area here, between 85 and a quarters, 86s, you had this little peak of volume, and basically what I was doing in this area was, okay, as we were working this small area, I was waiting to see the market. Once it kind of trapped this volume between 85 and a half, 85 and 3/4, I was kind of lift 86s. I believe 86 and a quarters, 85 and 3/4, and I managed to get filled on both. So I was trying to kind of just sort of work this small area, and I've got a really nice stop location behind this little kind of node of volume here. And now between here and the 87 and a half, the top of value is now. Okay, so we've had this counter auction. Is this the low of the attempted counter auction, or are we actually now really going to go down and fill the gap? So this is what I mean by you have to be very clear as to where your stop is, and also just kind of be aware as to the areas you want to attack aggressively if you are going to do so. You can kind of have that skew already and going into the market open as to how you want it to be positioned, and then it was a matter of, okay, letting the trying to translate the price action into a kind of trading idea. So above these 87 and a quarters, 87 and a halves was the top of value. And again, when the market is churning like this, something which I really want to kind of focus on is when you have a bias necessarily, or that kind of technical setup, and how you're trying to skew yourself towards, or how the market is potentially skewing itself towards. When it's kind of churning like this, especially on these type of bids, is I'm looking for exhaustion into the bid and not necessarily trying to attack aggressively into highs. And by I mean exhaustion, like, so for example, when I'm trying to trail my stops, like, I'm basically using my footprint a lot. I'm using any kinds of signs as to where the market doesn't want to trade, or where the market was trading heavily and then now it's continuing to do so. As long as that is still showing itself, then okay, I can kind of continue to move my stop accordingly. So it was all for me about holding this above 87 and a half, 87 3/4. I want to see that bid. Okay, yeah, it may churn it out a few times, but I want to see it hold firm, keep reloading the bid, and you're just focusing on your target at this point, because it can kind of feel really slow and lethargic. And when you're trading this market, say you're kind of used to hitting momentum, hitting highs, you're lifting 87 and a half, 87 and 3/4. You're paying down a handle at a time, buying again, paying down a handle, and you can get chopped up in this range. But by kind of giving yourself that precursor and understanding going into it, you allowed yourself to kind of position earlier and then give yourself a better price with more size, for example, as opposed to taking lots of small losers and looking for that kind of momentum play. So This was a prime example. Was here when we kind of came back to retest the opening price, my average price, of that kind of exhaustion play. We kind of held that low volume, still holding this upper distribution above the value area. The delta was holding firm here. What I like about this as well, the volume is still consistently staying high. It's not dropping off. It hasn't. It's like the pace of the auction is still relatively quick, and the volume's still high. But when we are kind of offering down lower, it's kind of failing. We weren't kind of holding an offer. We were kind of down ticking and reloading, and that bid kind of popped up again and kind of was pretty quick to reload. So these are all things I was kind of paying attention to, and like as you kind of see how I was hovering my mouse, I'm only really looking to hover over where I was willing to cover and hovering over where I wanted to add more size. I was not really trying to, I was trying to be very clear and precise as to how I wanted to be managing my trade. So at this point, I was just trying to scale out of some size. Like I said, the poor highs I was convicted on going. A breakout above. A breakout above the kind of main balance was also the kind of main goal. Before this, I could have been a bit better in terms of potentially leaving more size on to attack the overnight high, and then managing my risk according to that. So once we broke the overnight high, can we maintain above it? Are we going to fail back into it? This is then how I can manage my risk. So potentially could have run more size for a longer period of time. If I'd kind of used the overnight high as a reference. I remember Reg did a good video in the bund talking about that, kind of using the overnight highs and lows as references for kind of overnight positioning and whether the market is going to sustain itself or what type of day type we're going to get. So I think that's quite important. So like when the market shows you how strong it is, shows you its hand like this, it was just a matter of just knowing where you're scaling. And like I said, you knew the type of price that you're looking for. You knew where the market should react. It was all about, okay, right, we're still seeing that type of characteristic, and then running a target pretty much, and then managing your scale out. But if I quickly just come back onto just quickly to finish off on my chart. I mean, so basically it was. So yeah, like I said, and once we had that very strong open drive, it was quite a choppy session. We had a China comment. We extended the top of the bracket, and then we had a negative China trade comment, and the market then kind of chopped the rest of the day before closing strong on the day. But my whole principle was, when you had these kind of symmetrical day types here, and the market then gaps. We've been kind of gapping lower and no follow through, gapping lower, no follow through, gapping lower, and then we gap above at the top of this sort of kind of small consolidation zone. This was your chance to kind of. This was your chance to. I don't know if you guys have been able to see this. I've been on the wrong screen. Sorry. Let me just go over here. Like I said, this was the area here to kind of be making the most of this trading opportunity. Was this small area here when the market then did show its gap up and push higher. You didn't have to kind of be trying to play up here. You could have been playing a lot lower, especially when the market failed to have that counter auction fill the gap and it kind of then had its drive with that real churny bid sort of thing. I hadn't been trading these days here, but just in terms of, I imagine that the bid was very distinctly different in terms of how the liquidity was stacking the bid, how it was kind of reloading, where we were opening relative to everything else. So relative to the ranges and stuff. So I thought that was quite important and kind of a small key you could have used going into the day. So yeah, other than that, guys, that was kind of really my premise. Just using a small few things to give me that kind of early bias or early idea as to how I wanted to be managing my trade.